The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And as we continue here at the Farm Progress Show, day number 1 of the event in Boone, Iowa. Jesse Allen back with you here on Market Talk. We're with our friends at Nutrient Ag Solutions today. We're going to talk more with them coming up in segment 4 as we wrap up the program. But let's talk markets. Not a bad day Tuesday, although we set new contract lows in corn and wheat Monday, so maybe we were due for a little bit of a bounce. Beans were okay. Cattle's a good follow through there. Let's take a look at what's going on in this market right now. Matt Bennett with agmarket.net joining me live in person here at the Farm Progress Show. It's good to see you, buddy. How are you?
Good to see you, bud. I'm good. It's it's not as bad out as what I thought it might be.
No.
Got a little cloud cover, some air moving. So, I think that the mood is kind of what I expected it to be just from talking to a few folks. But, you got to expect that it's going to be a little frustrating given what we've seen happen the last few months here.
Absolutely. Well, and I mean, thinking about this, and I mentioned it, we hit new contract lows in quarter wheat yesterday. And I mean, you look at the board, D's corn, 392 3/4 at the close Tuesday. Novi beans, 986. Wheat's in the mid fives on the board. I mean, we know the situation. Now, I think the big question is, how do we navigate it, Matt?
Yeah, I mean, there's a lot of tough realities here, Jesse. And, first of all, growers got to know, based upon the sales they've already made, can they make money if they go ahead and market more now? They've got to know, do I need money this fall? If I need money this fall and I sell right now, clearly it's probably going to have a better basis attached to it than October the 10th. And so I think there's a lot of issues that pop up to me, especially when we got a lot of old corn sitting around. There's going to be plenty of stocks, and so the incentive for the purchaser to go out and chase this corn is probably not going to be there. So I guess I'm just I'm trying to urge people, don't wait until the minute that you have to make the decision. Let's try to head some of this off the past, because you might say, oh, what is it going to be, 10 15 cents better? But as well as I do, Jesse, 10, 15 cents may be make a huge difference for a grower. 2 years ago, 15 cents didn't matter. Exactly. I mean, it really didn't. We were all making money then, but the frustrating thing is a lot of us maybe got a little spoiled, with what was going on then. And so 24, is a little bit of a attitude adjustment, if you will. I do think we're going to burn through some equity. We've got to understand that. And then how are we going to move through that? Like you said, we got to know how to navigate it. And there are no easy answers right now.
No, there are not. And I think about, if we're starting to get some lines at the elevator, I mean, September options, go off the board here this week and things like that. Some folks are, you mentioned it, getting forced into that decision here, or they're faced with kicking the can down the road and trying to play the carry of the market again. And to your point, there's people on every side of the spectrum. There's some people that have kicked this can down the road so much, and then there's some people that haven't played the futures and options market at all, Matt.
Yeah. So, for instance, whenever you're kicking the can down the road, the tough thing is that, let's say you're going to play the carry game. Yes, there's carry in the market. Is it full carry? No. Unfortunately, it's not. And quite frankly, the carry that you've got makes it very tough to make it work with interest costs where they are. So if you've got money borrowed, you got to understand, hey, what's it cost me to hold on to commodities per month right now? And for corn, it's gonna cost you close to 3 cents a month to hold on to it. With soybeans, maybe around 7. And so with that being the case, if you've got full carry or let's call it 32 cents out to July, that's 7 months. I mean, Jesse, it's 4.5 cents a month. I don't know. We've got to, if you're going to leave it in the bin, what can you do along with it? And so there's a lot of things a grower can do. For one thing, Jesse, anytime I put corn in the bin, if I'm doing nothing else, I just sell calls. I sell 30, 40 cents above the market, even if it's only for 5, 6 cents. And guess what? I hope to God I have to pay a margin call on that sold call, because that means the price of cash corn's rallied substantially. So if you want to put it in the bin, great. But let's at least have a game plan if we're going to put it in the bin.
Well, and I think about this too. Obviously, we're talking about it, the supply side of this situation. I think it's pretty clear we have in many areas a bumper crop. And I've said this a lot here the last couple of weeks, that the good areas are really good. The bad areas are bad, but the good areas outweigh the bad areas this year. And I think that just reinforces we're going to have a lot of supply and we're trying to find demand.
Yes.
We've got some demand at these cheaper prices lately, but it's almost like the blue light special, so to speak, you know. I mean, it's that supply demand dynamic. I don't see a big shift there right now.
Yeah, I mean, here's the problem. Let's say the USDA comes in and lowers the yield closer to pro farmer. Maybe you go down to a 181 and a half. I think the USDA has baked enough exports into this supply and demand balance sheet that they could actually extract some if the crop gets smaller. So don't assume demand has to stay where it's at. The reason they inflated demand is because the crop was going to be so large. It wasn't because we had this overwhelmingly great export book out there. Now, corn versus soybeans, respectively speaking, is actually a better book at this time of year for new crop compared to what normal is, you know. And so I don't know, Jesse. I think that the best thing to do whenever you're looking at the balance sheet is to understand, even if you cut yield, you're probably not going to get to what you would call a tight situation on corn. Now, beans, boy, you know, if you feel like we've sounded bearish so far, you're not going to want to listen to what we're going to say with beans, because it's a tougher thing to say. Now, you were talking a little bit about the crop. I will tell you this. I drove all the way across 36 yesterday from home, Route 36 into Kansas, about 2 hours. There's going to be a lot of corn picked in the next 10 days in that corridor. The corn doesn't look bad, don't get me wrong, but it's kind of giving up the ghost, if you will. I mean, not a whole lot of green in the crop. I did see one guy running yesterday, and based on the corn in the auger carts, it wasn't mounded up to where it was like 25 plus. It may be low 20s, drier than what I thought it would be. So I do think there's going to be a lot going on here. And I think, you know, if this heat caught some of this corn before it got to the half milk line, you know, I think guys might be a little disappointed with how it finishes. Now, the April corn's probably far enough along, I don't think it'll impact it. But some of that May stuff, you know, I wouldn't make any bold assumptions about what your yield is until you get out there and look at it with your own eyes.
I wonder too. You talk to farmers all throughout the summer.
Right.
You're traveling to meetings. You're speaking to folks. You're talking one-on-one with folks. You're talking with folks here at the show. I mean, what is the number one paramount concern you're hearing right now? Is it this crop that's ready to come off the field and marketing there? Are they worried about their inputs for next year and how that's going to look on the balance sheet? I mean, what's the number one thing you're hearing, Matt?
How am I going to make any money? Both old and new. Guys are frustrated and gals are frustrated. I totally understand it. When you're talking new crop, the really tough thing right now, Jesse, is, you know, you look at these 25 corn and then you look and see what fertilizer is. And I understand, you know, there's a lot of caveats here. There's a lot of give and take. The market's going to do what the market has to do for supply and demand, both on corn and fertilizer, but it's really tough to find black ink without using some extremely good yield numbers whenever you're looking at 25. So we've been telling growers, you know, the last couple of years you've had high price of corn, fairly high fertilizer price. I want to sell the corn, buy the fertilizer at the same time, at least on a ratio basis, to lock that in so I don't get strangled if one of those goes in the wrong direction. This year it's a little more complicated, Jesse. I'm not going to lie to you. Whenever it comes to this 24 crop, unfortunately, I feel like the farmer is extremely undersold. You know, your elevator systems are going to relay that to your end users, are going to tell you that. And so it's going to be tough, you know, for a grower to be in a position where, you know, that they feel like they're going to have a great year. I mean, according to the University of Illinois, we're going to burn through, you know, average grower in Central Illinois is going to lose about $130 an acre on a 50-50 rotation. That's an average grower. Now, I know that's not everybody, but the thing is we have to grasp the situation and then decide what are we going to do about it. So I think that, you know, a lot of us that maybe haven't done anything off farm for a while may have to figure out what we're going to do to kind of make the situation better, because this is going to be a challenge, and I don't expect that it's going to be over with right away.
Well, and I think about this too, and I've started to hear some of this chatter, and you've been in this business, you know, on the brokerage side for a while. You're a farmer too. You've navigated all the different tools in the toolbox. There's some folks that are, you know, talking about, well, I've never really played the futures and options market. I don't know what to do. I don't have a good advisor. I need some education. You know, everyone's telling me I need to think about this or that, but they're not telling me what to do specifically. So, I mean, from that standpoint, what would you really tell folks as far as getting themselves educated to navigate this environment?
Okay. One of the things that you said that really catches my attention, because a lot of people say this, is what do I need to do to learn how to play the futures and options markets? But we don't play the futures and options markets if we're a farmer. We've got to hedge our risk. And so what I always tell growers is you've got to know your farm like the back of your hand. You've got to know, hey, if I end up raising 240 bushel corn, and I've already sold 35% of that at an average of 460. If I sell everything else today, how much money am I going to make or lose? What is my break even? What's my return on investment? How much am I paying myself in these situations? And so whenever you get there, Jesse, you can understand that, like, let's say that if the market went down another 20 cents, you're going to be so far underwater, you can't make your land payment, whatever it might be. Hey, I'm going to step in here due to what I know, and I'm going to put a floor into the market. I'm going to do so in a flexible manner where, maybe I'm buying a 380 put option. Maybe I'm selling a 430 call, because the only way I can afford the 380 put is to sell something along with it. And what am I doing there? I'm saying, you know what? If it goes above 430, I know I've got 430, but I can live with 430, but I can't live with 350. Yeah. And the last thing to put into that is, what's your crop insurance program? Because if you're 85%, right now we're in the chips at an APH yield. And so you have to understand how these revenue policies work, and then use your marketing plan to accentuate that insurance policy.
Good way to put things. I know folks have questions. agmarket.net, easiest way to reach you and the team. You have a ton of resources available, a lot of great minds on the team that can help folks out. Matt, it's good to see you, my friend. Thanks for being here with us. And I guess we'll enjoy the rest of another good Farm Progress show. What do you think?
Absolutely. Thanks for having me, bud.
Matt Bennett with agmarket.net joining us here today on Market Talk. Coming up, we're going to finish up here from Nutrient Ag Solutions. We'll talk a little bit more with them about some of their different segments that they have on display here at the show and more. We'll be back on Market Talk right after this.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.